Good morning, traders. This is Brad Matheny. Today's the 4th of January, 2025. I just got done completing the videos for my subscribers, and I'm actually pretty excited to share a few things with you. Now, I've got to tell you that a lot of what I've shared with my subscribers is detailed information going out 18 to 24 months about how they can protect their capital and profit from the market's moves. Yes, I am able to map out and see data that far in advance. I also update them every day and every week as the markets continue to trend. But I just want to let you know that you need to be prepared for a lot of volatility in 2025. I'm not going to hand you a roadmap for free. I do a lot of research day in and day out to try to make this stuff work for the people that subscribe to my Mint.com expert growth. And again, you can come over here. This is the Mint.com website. Try to drag it right on in here for you. Come over and try to take advantage of this Christmas special before it goes away. I'll take it away at the end of this week. So you have basically another 6, 7, 8 days. Take advantage of this if you can, and if you're having trouble trading and having trouble struggling to learn how to take advantage of the markets and to try to make profits. I mean, I'm getting some wonderful comments from people, you know, just last Friday alone, I was getting comments about people making, you know, $400, $700, $1,200 a day on small options trades. I mean, it takes time. Learning to become a good trader is something that takes time. And it takes energy, and it takes resources, and it takes dedication for you to do that. But I'm here to help. And the people that I have already started putting the pieces together. The people I have as subscribers have already started putting the pieces together. And now they're basically making the cost of a 1-year subscription with me back, you know, every couple days. And it doesn't take long. We'll start with a few $1,000s, practice, learn, watch, use my gunslinger tools, which I'll show you here in a minute, and use my expert growth TTScanner hot list, which these are the TTScanner hot lists. These triggers are absolutely beautiful. Now, this is 15-minute. Let's come over here to the spider sectors. Go to 5-minute. Take a look at some of these. Oh, there are none. Let me see. 2-minute. XLU, long, 2 trades. Let's come back over here to 15-minute. We don't have any here. So the dailies, 60 minutes are going to be longer term. Let me come back over here. And on these 5 minutes, GDXJ up in the trades for 6 bars. On the second, we're up 0.5%. Nugget in the trade for 6 bars, we're up 0.75%. IXN in the trade for 8 bars, we're up 12%. GNR, we're in the trade for 1 bar, just got into it, minus 0.6. But the idea is, guys, these things, you just follow these. These will keep you in the market efficiently throughout rotations and keep you away from risk. There's 2-minute triggers, 5-minute triggers, 15-minute triggers, 60-minute triggers, and daily triggers. And I'm telling you, I believe anybody can do this. So let me come back over here and show you a few things. So not only do I deliver all of this incredible research, but I've also, because I want to show people how to do it, I've also tried to create this challenge. I call it the $1,000 challenge. And really what I'm trying to do is teach you how to make 40 to 50% every 20 days, which is really only 3 weeks of trading. Because 20 days is 3 weeks, 21 days is 3 weeks, and that gives you 3 weeks of trading. Well, I started it on the 16th of December and just ended my first 20 days yesterday, and I am currently up 47% in my positions. I was up higher. But I got myself into, I kind of deviated from my plan a little bit. I'm sure many of you know about trading and how that works. And I got set up for a rally phase in the market that I was happy to see on Friday, yesterday. I managed to book a couple of profits yesterday and leave the rest on into the weekend and into next week. Now, many of these options expire on the 17th of January. So I've got another, 2 weeks to go, a little under. And I'm not too worried about it. I think everything's going to play out just fine given my research. But had these played out differently, I might have been up in the 60 or 70% return on investment range in 20 days. But remember, I'm playing on a very small account, okay? And basically, the rules of the account are very simple. I am not trading more than $300 at any given time. I'm not trading more than 1/3 of my capital at any given time. So I got $1,000 to start with for the first 20 days. I never had any open positions that cost me more than $330. Never. I was in and out most days, and even the positions that I do have right now on a cost basis are less than $330. Now, if they play out the way I expect over the next couple of weeks, I'm telling you, you're going to be looking at a pretty solid little rally. And I think I'm going to probably kick the account up over, maybe 70, 80% if the market does what I expect. But again, I'm up. Basically, I've turned a $1,000 account into a $1,490 account already, okay, with my open positions ready to profit come Monday. We're going to be looking at a pretty solid, nice little move. I think we're going to be looking at a good, solid uptrend. And like I said, I've got till the 17th, and that's 2 weeks away, basically, to go ahead and let these trades play out. Plus, I share these trades on my Discord channel with everyone. So again, I've already hit my 50%. You know what that means? I will be able to double my account if I can keep this up every 30 to 40 days. And again, I'm trading $300 in options, no more. And again, I'm starting with $1,000. So if I were to, I've already made 490 with a bunch of open positions. The long and short of it, you have to have capital to try to trade. So if you started with a $500 or $600 account, you'd already be up 120, 130% just following my trades. You can do better than me because I'm trying, in between phone calls and writing code and whatever, handling customers, I'm trying to just execute a trade like a normal person, not trying to be overly aggressive, just trying to really be super conservative about what I'm doing. And I think anybody can do this. I know people can do it because I'm watching them do it day in and day out on my Discord channel. So now what I'm trying to tell you is come over here while you have time. Make an investment in yourself for this $99. Come get my research. Come get my data. And I'm going to give you some hints here, okay? Number one, the markets, the actual markets themselves have now rolled back into trending. Okay, so this is one of my custom indicators. I go over this every week with traders. We've rolled back into trending. We will likely roll up into an attempt to make new all-time highs. Hint number one, it's not going to last forever. This is weekly data, but I'm telling you right now, we've rolled very strongly back into bullish trending. Okay, number two, the markets themselves are struggling to get out of their own way. Okay, this is my market rotation index monthly chart. We have seen a big washout in December, back down to historic lows. Do I expect this to rally back up going through an inauguration and into the early portion of 2025? No way, Jose. Okay, we're looking at consolidation into the first half of 2025 before we potentially get into some breakaway range. That's why you need my help. This is a trader's market. I have trend following systems. I have investment systems. They're all doing very well. My investment system made a little over 20% this year, very solidly. Really didn't even take a trade. It just stayed long all year long. Hasn't really taken a trade in 2024. But again, this is going to be a trader's market, and you will probably get washed out like everybody else who's trying to trade and doesn't really have any clue. If you're not prepared for what's coming, this volatility is going to be very dangerous for you. Okay, now next, let me show you again what's going on here. Custom cash flow index has moved into a very broad head and shoulders formation. So the next phase of this formation is, here's our left shoulder, here's our head, and then the right shoulder is going to come over here. Okay, now how deep can we go with this? I kind of think this low here, maybe this low, but that would be fairly substantial. That's the what I call the Kamala crush low. Oh, I'm sorry, September. The Kamala crush low is right here. So this is the end of the year crush that happened in 2023. So again, I think, you know, this area here as a deep low in 2025 could be a fairly solid washout area before we attempt to change directions and maybe head back higher. But it means we've got to clear this right shoulder. If you understand what that means, it means we're going to go up for a bit and then roll down into a deeper low in early 2025. Next. And again, I'm not trying to give away everything because, hey, you know, I don't want to give you my research when other people are paying for it. Okay, here you go. This is another little hint. Robotics, innovation, solar, and probably technology, certain technology, possibly AI, possibly innovative, disruptive technology are still going to do very well. Okay, this is the innovation index. I warned everyone back over here in this area that innovations were going to do extremely well at the end of this year, moving into 2025. And the reason I knew this was going to happen is because I've lived through a number of market moves. And we typically, after a big boost of saving the market after COVID and big money spending, we move into a shift. Everybody, it's so funny the way the cycles work. When the markets are, when the Fed's dumping money into the economy and interest rates are at zero, they buy all the big names because all the big names, you know, typically have decent earnings. They're rock solid, and foreign money rolls into the biggest names like, you know, Google and Intel and Microsoft and Nvidia and what have you. But then about 2 years, 2.5 years later, when that bubble kind of bursts or subsides, they start looking for the most undervalued potential disruptive sectors that are available. And that includes foreign markets as well. So all of a sudden, they start pouring back into these beaten down, undervalued stocks, and they have now seen 120% rally phase. About to probably go higher. And I think the next big move here, guys, is solar and robotic. So innovation is already kind of left the launch pad. Still have opportunity there. But robotics and energy, solar energy and disruptive energy, fusion energy or whatever else is coming up, get ready. I think those could be very powerful. Okay. Now, lastly, I'm going to come over here and show you two things. The fear index is higher at 8.0. This is above my first level of fear. Not really worried about it. There's going to be fear. It's going to stay elevated into this, but the way I believe this fear is being interpreted is that global investors are still going to try to pile into the SPY and U.S. assets because there's really no other place to go. Even if Donald Trump comes out and disrupts our economy and tries to make something happen, you know, where are you going to put your money? Think about it. You're going to put your money in, you know, in France or Canada or, you know, I don't know, pick a country. You think you want to put your your hundreds of millions of dollars over in some place that's possibly going to weaken because of what the U.S. does, or the currency is going to weaken? No, probably not. You probably want to try to figure out a way to buy into something that's going to grow in a U.S. dollar-based asset mode. And I think that's why the next 4 or 5 years are going to be very dynamic for the markets. Now, they will change. At some point, you know, these undervalued foreign markets or global markets are going to seem like a real opportunity, but it's not going to happen right now. Okay, next and last one, well, second to last one I'm going to show you is the volatility index. And again, I go over all of these. You can see them down at the bottom. I go over all of these for everybody every week. But now here we have the volatility index, and the volatility index is a measurement of trending. Think of it as like a, you know, almost like a tachometer in a car. And many of you know what a tachometer is. Some of you may not, but that's the speed of the engine, the number of revolutions that the engine is making. And you know, when you drive a car, you go first, second, third, fourth, fifth gear typically. And the reason being is the engine can't keep going up to 17,000 RPM. It'll blow up. So you have to shift gears. So think of it like this. This is the upper range of the engine, and this is the lower range of the engine kind of at idle. This is a deep low. This is a deep low. These are moderate highs. This is a pretty deep high, and this is a pretty deep high, meaning accelerated higher. Where we're at in this year is we are likely going to stay in this consolidated range for a good portion of 2025, which means you need to be prepared to be very agile with regard to market trends. Okay, it's not going to be easy, but I know you can do it. And now, the very last thing I'm going to show you is this. And you might want to pause this video right now. I don't care. Because if you can figure this out and understand what's going on here, this is my daily cycle patterns mapped out. These are Gann and Fib patterns mapped out for the next 3 months. And what they are going to tell you is they are going to tell you the phases of the market cycle that is going to be trending. So they're going to basically map out the next 3 to 4 months for you very cleanly. Now, I've done this, just so you know, for the next 15 years. All the way mapped everything out for me and my clients. So this is a very important thing to know, is that I am not just guessing at this stuff. I'm actually using, you know, tried and true, or relatively tried and true, because this is a brand new inference engine. I built it last year, but it has proven to be invaluable to me. So I'm going to leave you right there, and then I'm going to come back over here and show you some of the other resources. So now these are my TTScanner hot lists. TTScanner hot lists, there's basically 7, 8, I think, 8 total hot lists that I deliver, plus the back over here, the real-time hot lists. These are intraday hot lists for all my subscribers. So over here, we're getting into these real-time hot lists, or these weekly hot lists, and they give us beautiful swing trade opportunities. And again, they give us a lot of great moves. Like here, this SOXX trend, we've got and I just want to show you, there's our brand new trigger. We don't have a trade trigger yet. Okay, that would be over here with a long or a short, or here. But we have these two triggers. This is indicating a very solid bounce to the upside. This is called a 33 thrust. This is called a pop shift. And now, if I come back over here and try to drag this over to about there, so I can go back and show you a chart, we're going to come here. That's fine. SOXX. This is daily. And now take a look at this, because I want you to see what do we have going on here with SOXX. Actually, let's come over here, because I want to show you the gunslinger tools. Okay, So this was a weekly trigger on SOXX. So now, weekly trigger, look at how beautiful this is. I don't know if how skilled you are or not, so I'm going to go through what I try to teach my members. So members get my gunslinger tools. There's more than just these, but I'm just going to focus on these for you guys right now, the new guys. This is called the pressure cycles version. This is the Donchian cycles version. Donchian cycle version provides trending. Okay. Now, I will probably have to add one more. So what I want to point out here is we've been in a fairly solid uptrend, right? I'm going to come here, come across this low as rejection, meaning it's a solid low, carry it across here as well. You can see this rejection point across here, rejection here, pausing and rejection here. So this is basically the low cycle, this is the upper cycle, and then this is what I would call the blow-off cycle, okay? The blow-off cycle is essentially, hey, we got way outside of our range. Now I've got to look at this area as, hey, if I get here or I'm breaking out through here, this is my next area where I want to try to pull profits. Anything here or above this area, try to pull profits. Now ideally, I should be buying off of these lows in the cycle, or this low, or potentially over here in this low, if this cycle trend continues. But now, notice how beautiful this is. Look, moderate cycle low, big cycle low, big cycle low, big cycle low, which was this one, big cycle low, and moderate cycle low. So we've got ourselves a beautiful little cycle low setting up right here, moving into a potential uptrend, but we also have this flagging setup taking place right here. And I will teach you how to do this so you can go ahead and learn to do this on your own. But we're getting this beautiful cycle flagging formation into an A, B, C, D rolling consolidation E breakaway pattern. Stop should be down here near these lows. We're getting a good solid breakaway in a rotating upward trend, already in bullish trending. How hard is this to figure out, guys? Now, because of my research, I can tell you, and again, this is weekly, that you should be targeting this upper area here to try to take profits. Really anything up above this level or near this level, try to take profits. And that's because of my research, which I can't tell you right now. I mean, that's why I want you to try to join and learn what I do for you, because I spend hours doing this every weekend. Pretty much my family knows Saturday's all about work. But I want you to know this is just one trigger right there. Just one little trigger, SOXX right there. Now look, we got another one here, IXN, Global Tech. What do you bet? I can come right over here, IXN. I don't know. What do you see, guys? I see the same trigger. I see the same channel. So I'm going to pull a channel off of this, coming across here, off the highs, coming across here as the upper channel. I have these deep washout cycle lows very clearly ahead of me. We're in a bullish trend. You can see it's all green. Off the Donchian cycles, we've got almost no cycle low rotation here, but we've got a popping kind of a pattern. So what do we have up here, guys? We have kind of a flagging pattern across here and across here. Same type of setup. A, B, C, D, E, potential breakout. Looks like a very solid setup. The only problem you got with this, I'll be honest with you, is that you're up into that upper channel. So you have to run a very tight stop. I mean, reasonably tight, somewhere down in this area, 83. And, you know, if we get above these highs up here, roughly 88, move your stop to break even plus. So you got to get your stop away from risk. So you don't have, or at least closer to your entry price. But again, every week, these TTScanner hot lists deliver beautiful trade setups for my subscribers to go take a look at and research and decide what they want to do. So you not only get trading triggers, you get my videos, you get my custom indexes, you get my analysis, you get TTScanner hot lists, you get Mint movers, you get the 33 thrust, the pop shift, you get my Discord channel, you get the gunslinger tools. Let me come back over here and show you. So the gunslinger tools consist of, right here, consist of all of these tools. Okay, I mean, you get the cycle systems, the Bollinger Band systems, the Fibonacci systems, the wave count systems, the cycle systems. I mean, you get a whole host of tools to try to get you ready to go. Plus, inside the member area, back over here, there is a ton of information for you. Webinars, Discord events, live Discord channel. We do this all the time to try to help you. Getting started videos. There's the gunslinger tools right here. So here's videos to teach you how to use them. These are all the gunslinger tools right here. In fact, the one I was going to show you was this one. This is the newest gunslinger tool. Let me drag this over. And I call it right now the top bottom trend indicator. So it's based on linear regression. And what I want you to pay attention to is the trending. You have a short-term system down here and a longer-term system right over here. Now, you have control of these. You can set them up any way you want. What I'm trying to teach people is to learn how to take advantage of these trends. So when they both turn blue, like you have right here, I have to change that draw color to light blue. That's where you have your bullish opportunity. And then here, they both turn blue. You have your bullish opportunity right through here. Now, these little E4, E8, E13, these are exhaustion patterns. So this is where you want to be cautious of pullbacks. And they work beautifully. You can see E4 is the lowest exhaustion pattern, rolling downward. E8 is the next biggest one. Then E13 is the next biggest one. And eventually we'll get into an 18. Let me see if I can find one. This is 1 minute. ES. So there's E8s, E4s. We may not. Ooh, maybe. Oh, 13. But look at that 13. Beautiful. Look at this. Right at the top. So these 4s create a little pause. Let's look at this move for a moment. So here we go. Trend coloring. Blue all the way up from here all the way up to here. And you get the E4. The rule I teach people with the E4s, draw a line across the high, draw a line across the low. Now, if it breaks the high, it's probably going to go higher. If it breaks the low, it's probably going to go lower. So if the price moves down like this, you want to try to get out of it, cut your position, get into a safer mode. If it immediately breaks the high like it did here, it's probably going to go higher. And again, same thing here with the E8. If it's going to break the high or break the low, you want to remember, breaking the low, cut down your position. Breaks the high, it's probably going to go higher. So now we come all the way up. We get the end of a trend, so you can sell 60, 70%, whatever you want. That's the whole idea. Book profits. Remember, the rule in trading is book profits all the time. That's really the biggest rule in trading is don't let your profits get away from you. And then the 13 level just wiped out the top. Absolutely beautiful level up here at the top. And remember, these work on anything. Like here's the E8. in the invert. Completely nailed that bottom. I mean, just nailed it. And I can throw it, you know, on anything. I can throw it on SOXX. Doesn't matter. Come over here. Look at these moves. E4, caught the bottom. Right here. E4, E8, caught the top. E4, caught the bottom. E4, caught a pullback right at the top. E4, pullback. Now this is a 1 minute chart. Then you get E8, E13, and we might actually get, no, we didn't get the other. There's one last one that I was trying to show you. There it is, E18. So this is an exhaustion at an 18 count. And that basically means that the trend is over. It's pretty damn well over. Now, we come across here, continued to roll through, but it had to reset the cycle. You can see here it rolled up, consolidated, reset, moved back into bullish trending. And again, this was right at the end of the day. So, and what I really love about this system is the trending is very clean, but these E8s and E4s, they work on anything, any time frame. So look, I'll come over here to 10 minute. E4, pause, pull back. E13, there's our E8 and E13. Beautiful. E4, right before the top. E4, right at the bottom. E8, right here. Didn't get the E13. Okay, it's not perfect. E4, beautiful. Called out that top. E4, beautiful. Called that one out. Beautiful here. And a lot of times, as I'm trying to teach people, you know, it's about, you know, you think about this. You get the E4, you can actually trade the invert. You get the E4, trade the invert. Get the E4, trade the invert. Get the E4, trade the invert. Get the E4, trade the pullback. So what you're doing here, guys, is these things, you know, they don't always work out. Like here's an E4 that didn't quite work out too well. But if you trade the invert, you know, it can play out very, very well. And especially when you're looking at, you know, longer term data. So like, for example, let's come over here to IWM. And so here you go with the rolling pattern. This is 30 minutes. And IWM can be a little spotty, but you can see how these lows just nailed the lows. That didn't. That nailed it. That nailed it just beautifully. Here we go through rotation. Nailed this low. Nailed the 13 or 18 high. 13 was a little off. 18 caught it just before a pullback. And E4 caught it right at the pullback. So again, this is getting, there's a big solid downtrend. And again, E4, E8 broke down. E13 broke down. E18 broke down and then rolled up above the level. That's an indication that this is now basically basing and bottoming. Plus the indicators turn blue, indicating bullish trending. We're no longer in a downward bearish trend. So remember, you get all of this, guys, and I'm trying to help you. You just need to remember, come out here, come to Mint.com, right there, Mint.com, and for 99 bucks, I promise I'll do my best to give you the tools, give you the resources, give you my training, my knowledge, when I can through the live events and in the Discord, to help you become a better trader. Plus, you get to follow me along with the Expert Growth $1,000 challenge. And really, you know, I'm trying to make 40 to 50% minimum every 20 days. Because if I can teach you how to do this consistently, you will turn a $1,000 account into a $150,000 to $250,000 account in 1 year. Okay, guys? It's kind of that simple. So come check it out before it goes away. Take advantage of this Christmas deal, and I hope to see you on the inside of Mint.com.